SoFi, along with other firms in the fintech space, are cornered with never-ending macroeconomic news of inflation and student loan moratorium extensions. To make matters worse, short interest is still holding near all-time highs. The shorts are on it again, and they seem to be having a good time. Up by 0.5%, the short interest is now about 20.7% of the float, according to data released on June 15th. Now, before we get to the juicy stuff, let's hear what some analysts have to say about SoFi recently.
Jim,
Robert,
calling about SoFi, man.
What I've been saying about SoFi is I do not understand it.
It's interesting to see what the media narrative is. Here's the rest of what he had to say.
It's at $5. That makes no sense to me. It's a better bank than people think. But that said, I have no catalyst to recommend the stock.
Now, should you listen to Jim Cramer? We personally don't. Let's hear what Grandpa Munger has to say about Cramer.
We never thought we could get really useful information on all subjects, like Jen Cramer tends to have. And
last quarter, SoFi recorded yet another quarter of positive EBITDA for the 7th time, and a GAAP-adjusted net revenue of $322 million, a 49% growth from last year. With performance reflecting nothing but a positive trajectory, but the stock reflecting only a negative trajectory, what's the issue? Any investor watching this go down immediately feels the need to ask, is the stock market drunk? Well, we're right there with you on that. Mr. Market seems to be chugging Four Locos like nobody's business. But is this a good reason to sell your SoFi shares? Stick around until the very end of this video because we're going to go over everything you need to know to answer this question for yourself. In this video, we'll cover the most important key milestones SoFi has accomplished in the first half of the year so far, how this affects you as an investor, and why the market still seems to be completely ignoring it. As always, we're not financial advisors, and this is not financial advice, so always do your own due diligence. Without further ado, let's get right into it. While many are still in doubt and fear due to our current market environment, SoFi, the one-stop shop, is killing the game, and here are 4 key things that SoFi has accomplished. Number 1, National Bank Charter. Early this year, SoFi got its highly awaited charter and became SoFi Bank. This has tons of cost-saving benefits and enables SoFi to offer more competitive interest rates, giving SoFi a competitive edge over the others in the fintech space. Let's hear why this is so important, straight from SoFi's CFO, Chris Lapointe.
We assume the SoFi Bank will begin contributing to SoFi's results more meaningfully in Q2 rather than in Q1 when we open the bank. That's because, as I just mentioned, we opened the bank with no loans and initially capitalized it with cash from our balance sheet. This is an important distinction because we won't begin to realize the lower cost of capital benefits of the bank until we can originate and fund loans in the bank. And we believe it will take until Q2 to build the appropriate loan balances to see more than a nominal impact.
Number 2, completed acquisitions. In 2021, SoFi entered a deal to acquire Golden Pacific Bancorp Inc. and its subsidiary, Golden Pacific Bank, aka GPB. This February, SoFi completed this acquisition. GPB is now officially SoFi Bank. In this deal, SoFi agreed to pay approximately $22.3 million, which was a key move for SoFi to get the bank charter, and it's similar to what Lending Club did to get the same license. In another effort to become a household brand and the AWS of fintechs, SoFi closed yet another strategic deal with Technisys, a tech company that perfectly complements SoFi's tech leg, Galileo Financial Technologies. Technisys enables SoFi to offer the best-of-breed products, and Technisys technology complements Galileo's AI. Together, this dynamic duo will be able to create an end-to-end vertically integrated banking technology stack. SoFi can now serve customers struggling to get their money right and established banks, fintechs, and even non-financial brands who are eyeing the financial services space. Number 3, existing strategic plan. SoFi's current strategy is called the Financial Services Productivity Loop, where they aim for 3 things. Build a one-stop shop for financial services with best-of-breed products, drive superior unit economics that will make their products more valuable, and lastly, leverage the technology infrastructure built to create the AWS of fintech. This FSPL strategy makes SoFi a unique shop for everyone's financial needs because of its all-in-one app, like the 3% credit card cashback offering last April. Direct deposits from SoFi's checking and savings members can earn as much as 3% cash back on every eligible credit card purchase, only when they apply for the SoFi credit card. This is cross-selling at its finest, And instead of spending lots of money on marketing and getting new customers, SoFi is focused on adding more value to their products and cross-selling to their existing customers. This brilliant strategy lowers customer acquisition costs, builds a walled garden against competition, or as Warren Buffett calls it, a competitive moat, and ultimately increases profit margins. On top of that, SoFi also announced a 1.25% APY for direct deposit members last April. At this point, it was already an industry-leading APY, and like a fine wine, things got even better over time. 2 months after SoFi announced the 1.25% APY for direct deposit members, SoFi had once again raised its APY to 1.5% for its SoFi members who do direct deposits. This is 50 times better than the current national average. We've covered this in our video, SoFi Stock Galileo new partnership plus SoFi banking update, 1.5% APY. If you want to know more about this recent SoFi savings and checkings announcement, feel free to watch the video after this one, of course. Number 4, full year 2021 and first quarter results. Last but not least, let's talk about their milestone in 2021 and what seemed to be good news for the Bulls. Let's hear it from the GOAT himself.
We were able to achieve these milestones in 2021 and get to such a position of strength today for 3 main reasons. First, we continue to drive strong growth through great execution across our 3 diverse businesses, which reflects our ability to capitalize on changing macro conditions. Second, the success of SoFi's unique financial services productivity loop strategy accelerated as we scaled our business in 21, which allowed us to exceed our original 2021 member growth target by 40%, and importantly, still hit our EBITDA target. And third, we took a giant step forward in 2021 in achieving our goal of becoming a household brand name via our SoFi Stadium affiliation, the success of our integrated multimedia campaigns, and the virality of the influencers we partnered with.
In the first quarter of 2022, SoFi achieved its 3rd highest quarter with new members gathering a total of 70% year-over-year growth with approximately 3.9 million members. Products have also increased, and SoFi recorded its 2nd highest quarter with the most products getting an 84% year-over-year increase with more than 5.8 million products. On the flip side, SoFi still recorded an increase in adjusted net revenue of about $322 million for this quarter, a 48% increase compared to last year. And for the 7th time, it recorded yet another positive quarterly adjusted EBITDA amounting to $9 million, which is a 110% year-over-year growth. Now you love to see that. At the time of recording this, SoFi is back hanging around $5 per share with approximately a $5.35 billion market cap. The latest Fed moves are even more frustrating as it's setting non-stop rate hikes to fight inflation, and according to Motley Fool, this won't be good for growth stocks like SoFi. On top of that, many analysts like Kevin Barker, who represent Piper Sandler, have lowered price targets on SoFi and all firms in consumer finance. Should you sell SoFi and buy back in later? Well, in our non-financial advisor, always do your own due diligence opinion, no. And here's why. No matter what your average price is, 20, 15, 10, whatever the price may be, it probably wouldn't be the best time to sell near its all-time low. Would you buy a car for $30,000 and sell it for $5,000 within a year just because the price went down? You probably wouldn't. We're not fans of the buy high, sell low strategy, so unless you are, well, that's between you, Noto, and God. In our opinion, SoFi may be valued at an incredibly low price, and it's only normal for short-term investors to stay away from growth stocks posting losses with a low share price. It seems that the sell-off hasn't ended yet. Experts in the stock market are still uncertain of what's ahead, but in the midst of uncertainties, Captain Noto continues to acquire more SoFi shares, and right now Anthony Noto holds about 3.6 million shares of SoFi, and this is the reason why he believes SoFi is worth every dollar.
I cannot predict the future, but I can assure you that we have the best strategy and the most diversified set of businesses that have delivered superior, consistent financial performance, yet generating both high growth in revenue and strong profits as measured by EBITDA. We also have significant financial resources with more than $5 billion in capital and a battle-tested team. Most importantly, I can assure you that we will work tirelessly to be prepared as best we can for whatever we face ahead, just as we have over the last 4 years.
Shout out to all of you who commented in our previous videos. We greatly appreciate your support. A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. Shout out to Arthur Magazu, Wei Chu, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufrand, Jay Bone, Daniel Zinson, ABC Sam. You guys help to make these videos possible, and we truly appreciate it. Thanks for watching, and until next time, peace.